You can have the most advanced trading strategy in the world, but if your mind is your enemy, the market will expose it in seconds. Today, I'll share a secret that most traders will never talk about. Not because they don't want to, but because they don't even realize it's the real reason behind their losses. If you truly want to win in trading, don't just learn the market, learn yourself. Stay with me, because by the end of this, you'll see your trading in a completely different way. When most traders think about improving their results, they go straight to tweaking their strategy, changing indicators, trying new patterns, or switching markets. It feels logical. If you lose a trade, something must be wrong with your method, right? But here's the uncomfortable truth. In many cases, your strategy isn't the problem at all. You are. More specifically, your unexamined thoughts, biases, and emotions are silently guiding your trading decisions without you even realizing it. Self-awareness in trading means being able to step outside of yourself and observe your mental and emotional state in real time as you trade. This isn't about judging yourself harshly or shaming yourself for mistakes. It's about catching the subtle shifts in your mindset that happen the moment you put real money on the line. Think about it. Have you ever noticed how confident you feel in backtesting or paper trading, but that confidence crumbles as soon as you're in a live trade? The reason is simple. In a simulated environment, there's no emotional attachment. Your brain processes decisions logically. But the second money is real, fear and greed creep in. That's not your strategy failing. That's your psychology reacting. The secret that no one talks about is that trading is essentially a mirror. Every fear you haven't faced, every insecurity you carry, every impulsive habit you've ignored, the market will pull out of you. If you're not aware of these tendencies, they will keep repeating like a loop you can't break. For example, some traders constantly exit trades too early. On the surface, it seems like locking in profits is a good habit. But if you look deeper, this often comes from a fear of losing what they've already made. It's not about strategy. It's about a scarcity mindset. Others keep moving their stop losses further away, telling themselves they're giving the trade more room. But in reality, they can't handle being wrong. That's not market behavior. That's ego protection. Self-awareness begins with tracking these patterns without judgment. This is why keeping a trading journal is so powerful. Not just recording numbers, but writing down exactly what you felt, thought, and feared during the trade. Over time, you'll start to see your psychological fingerprints, the repeating behaviors that sabotage you. Once you see them, you can start to work on them. This doesn't happen overnight. In fact, self-awareness is a skill you'll keep refining for as long as you trade. It's about building a habit of noticing when your mind is shifting away from discipline and toward impulse. A practical exercise. Before every trading session, take 2 minutes to check in with yourself. Ask, am I trading to make money today? Or am I trading to prove something? Am I calm or am I chasing? Am I following my plan or am I trying to force the market to give me what I want? If you can answer these questions honestly, you'll already be ahead of 90% of traders who never stop to question their mindset. The irony is that when you focus more on self-awareness and strategy, your strategy actually works better. Why? Because you're executing it as it was designed, without interference from emotional impulses. You're no longer changing your plan mid-trade because you feel something. You're no longer chasing after the market because you fear missing out. You're no longer holding losing trades because you're afraid to admit you were wrong. In this sense, self-awareness is the invisible edge in trading. You can't buy it. You can't copy it from someone else. You have to build it through deliberate observation and reflection. And unlike a new indicator or system, once you develop self-awareness, it applies to every market, every strategy, every time frame. So the next time you're tempted to jump into a new trading course or switch to a different style because your current one isn't working, pause. Ask yourself, is it really my strategy that's broken? Or is it my ability to follow it without letting my emotions take over? If you start here, with self-awareness, you'll begin to notice a quiet shift in your trading. You'll feel more in control, less reactive, and more patient. And those qualities, more than any technical setup, are what will carry you to long-term success. Because in the end, the market doesn't care about your strategy. It cares about how you execute under pressure. And the only way to execute flawlessly is to know yourself so well that the market can't manipulate your emotions. That's the real secret no one shares. Many traders unknowingly tie their self-worth to their trading results. Every winning day makes them feel smart, capable, and even superior. Every losing day crushes their confidence, making them question their intelligence and value as a person. This emotional roller coaster is one of the most dangerous psychological traps in trading, and yet it's one of the least discussed. The truth is, your wins and losses are simply data points, not verdicts on your character. A profitable trade doesn't mean you're suddenly a genius, just as a losing trade doesn't mean you're a failure. But when traders confuse results with self-worth, they create a fragile mental state where their confidence depends entirely on the market's daily outcome. This dependency can destroy emotional stability and lead to impulsive, revenge-driven decisions. Imagine a trader who starts the week with 2 strong winning trades. They feel invincible, start increasing position sizes, and ignore risk management because they can't lose right now. By Friday, a single large loss wipes out their entire week's profit, and their confidence crashes with it. Why? Because their self-image was built on those temporary wins. Without them, they feel exposed, vulnerable, and desperate to get back what they lost. This cycle isn't about strategy. It's about identity. Detachment is a cure. Detaching your self-worth from your trading results means understanding that you are the same person whether you win or lose. It's about seeing trading as a performance skill, much like an athlete or musician. Some days you'll perform well, other days not so well, but neither defines your core value. This detachment doesn't mean apathy. It doesn't mean you stop caring about results. It means you care about the process more than the outcome. The difference is subtle but life-changing. When your focus is on flawless execution, rather than proving yourself right or protecting your ego, you remove the emotional weight that clouds decision-making. One practical method for building this detachment is to create a post-trade reflection routine that's based purely on behavior, not P&L. For example, instead of asking, "Did I make money today?" you ask, "Did I follow my plan today?" If the answer is yes, that's a win, regardless of whether the trade was profitable. This shifts your definition of success from outcome-based to process-based. Another way to separate identity from results is to diversify your sources of self-worth. If trading is your only source of pride and validation, every loss will feel like an attack on who you are. But if your identity is also rooted in other skills, hobbies, relationships, and values, a losing trade becomes just one small event in a much bigger life. It no longer has the power to break you. Many traders resist this advice because they think detachment will make them less motivated. In reality, it does the opposite. Without the constant pressure to be right, or when every time you trade with more freedom, clarity, and patience, you stop forcing trades just to feel validated, and you start letting the best setups come to you. Over time, this mental shift naturally improves your results, not because you're working harder, but because you're thinking clearer. It's also important to understand that markets are inherently unpredictable. Even the best strategies have losing streaks. If your sense of worth is tied to constant success, the market will inevitably hurt you. Detachment allows you to see losing trades as part of the game, not as personal failures. This mindset protects your emotional energy, which is one of the most valuable resources in trading. Detachment also helps prevent overtrading. When you're desperate to repair your self-image after a loss, you're more likely to jump back into the market with poor setups. This is called revenge trading, and it's one of the fastest ways to blow up an account. But when you've separated who you are from what your results show, you can take a loss, step away, and return the next day without the emotional baggage. The paradox is that the more you detach from results, the more consistent your results become. This is because detachment breeds discipline. And discipline, not prediction, not luck, is what keeps traders profitable over the long run. So, the next time you find yourself feeling elated after a big win or crushed after a big loss, pause and remind yourself, the market did not define you today. It simply gave you feedback. Your job is not to take that feedback personally, but to use it to improve your process. Because when your worth as a human being is no longer chained to your P&L, you gain a psychological stability that most traders never achieve. And that stability is a competitive edge no indicator can provide. Most traders obsess over the result of each trade. They celebrate when the trade is profitable and get frustrated when it's not. But this outcome-based mindset is one of the most damaging habits a trader can develop. The irony is that in trading, you have no control over the outcome of any single trade. You can have the perfect setup, flawless execution, and still lose because the market doesn't owe you a win. What you do control, however, is your process, the rules you follow, the discipline you maintain, and consistency with which you execute your plan. This is why developing process-oriented discipline is the cornerstone of strong trading psychology. A process-oriented trader doesn't measure success by did I make money today, but by did I execute my edge perfectly today? That subtle shift changes everything. It moves you from being an emotional reactor to being a disciplined operator. When you focus on the process, you eliminate a lot of the emotional turbulence that comes with trading. If your win today is based purely on execution, then even a losing trade can be considered a success if you followed your plan to the letter. This protects your mental state from the constant highs and lows that outcome-based traders experience. One of the most powerful tools for building process-oriented discipline is keeping a detailed trading journal. Not just a list of trades, but an honest record of whether you followed your rules. For example, before taking a trade, note whether it met your criteria. After closing the trade, review if you exited according to plan. Over time, this journal becomes a mirror, showing you whether you are honoring your process or breaking it. Daily mental checklists are another simple but effective way to reinforce discipline. Before the market opens, you can ask yourself, have I reviewed my trading plan for the day? Do I know my risk per trade? Am I emotionally ready to trade today? Answering these honestly ensures you're stepping into the market prepared, not just chasing opportunities impulsively. Process-oriented discipline also requires patience, the ability to wait for your setups without forcing trades. Many traders struggle here because the urge to be active feels productive. But in reality, the most disciplined traders often spend long periods doing nothing, waiting for the right conditions. They understand that in trading, activity is not the same as progress. Another key aspect is avoiding deviation during live trades. The moment you're in a position, emotions like fear, greed, or anxiety can tempt you to abandon your plan. This is where mental training comes in. Remind yourself that the outcome of this trade is irrelevant in isolation. Your edge plays out over hundreds of trades, not one. By focusing on perfect execution, you give your edge the chance to work over time. It's also important to embrace the concept of flawless loss. This means you can lose a trade and still consider a success because you executed it exactly as planned. This mindset removes a huge amount of emotional pressure. You no longer see losses as failures, but as part of the statistical nature of trading. Developing process-oriented discipline doesn't happen overnight. It's like building muscle. Small, consistent efforts compound over time. Every time you choose to stick to your plan instead of acting on impulse, you strengthen your mental framework. Eventually, discipline becomes your default mode, not something you have to force. This approach also shields you from the dangerous loop of over-optimization. Outcome-based traders are constantly changing their strategies after every loss, convinced they need a better system. Process-oriented traders, on the other hand, know that losses are part of the game and focus on execution, not constant tweaking. This stability gives them a long-term edge because they actually let their strategy play out. Another benefit is that process discipline helps you manage risk more effectively. When you're committed to following rules, you're less likely to take oversized positions, move stops, or let emotions dictate your risk. Over time, this protects your capital and keeps you in the game long enough for your edge to show results. The best traders in the world, whether in stocks, forex, or futures, often say the same thing. Their real edge isn't their strategy. It's their ability to follow it without deviation. They treat their plan as law, and their discipline as the ultimate trading tool. So, if you want to dramatically improve your trading psychology, start measuring success differently. Stop asking, did I make money today? And start asking, did I trade according to my rules? Make that your daily scorecard. Because in the long run, consistent process beats emotional reaction every single time. Trading is a game of probabilities, and probabilities only work in your favor when you give them time. Process-oriented discipline is what allows you to do that, to stay consistent, stay patient, and stay in a game long enough to see the true potential of your edge. And when you master that, you realize something powerful. The market is no longer in control of your emotions. You are. If you talk to the most successful traders in the world, they will tell you something surprising. They train their minds with the same discipline and structure that professional athletes train their bodies. They don't treat psychology as an afterthought or something to fix when emotions get out of control. Instead, they treat it as a skill that requires daily conditioning. The market is an unpredictable environment. Every trading session presents uncertainty, stress, and temptation. If your mind isn't trained to handle this, you will revert to emotional decision-making, no matter how strong your strategy is. Mental training is not about becoming emotionless. It's about learning to manage emotions so they don't interfere with execution. Visualization is one of the most powerful tools traders use to prepare mentally. Before the trading day begins, many professionals take a few minutes to visualize themselves encountering different market scenarios, a sudden price drop, a slow grind, or a false breakout, and responding exactly according to plan. This mental rehearsal builds familiarity. When the real situation happens, it feels less surprising, and you're more likely to act calmly. Mindfulness is another core skill. Markets move fast, and our minds tend to race with them. Mindfulness practices, such as focusing on your breathing, noticing your body tension, or simply pausing before making a decision, slow down your internal reactions. Even just 10 deep, controlled breaths before placing a trade can reset your emotional state. This creates a mental gap between impulse and action, which is critical in trading. Controlled stress exposure is a technique borrowed from sports psychology. Athletes prepare for high-pressure moments by simulating them in practice. Traders can do the same by trading smaller positions during stressful conditions or deliberately practicing in volatile markets with tight risk controls. The goal is to get comfortable with discomfort, so you can think clearly when it matters most. Training your mind also means developing mental endurance. Trading can be a grind, long hours of watching charts, waiting for setups, and enduring losing streaks. Without mental stamina, you start forcing trades just to feel active. This is why mental training isn't just about the market. It's about lifestyle. Sleep, nutrition, and physical activity all play a role in your ability to focus and make rational decisions under pressure. One overlooked part of mental training is recovery. Just like muscles need rest after workout, your brain needs downtime after intense trading. Professional traders schedule breaks, take time away from screens, and have hobbies unrelated to markets. This prevents burnout and keeps their decision-making sharp over the long term. Another key element is emotional labeling. Instead of saying I'm stressed or I'm nervous and letting that feeling control you, trained traders identify the emotion and the trigger behind it. For example, you might think, I'm feeling anxious because the price is moving against me, but my stop loss is in place, and this is within my plan. Simply naming the emotion helps separate it from your identity, making it easier to manage. Accountability is also part of mental training. Just like athletes have coaches, many elite traders have mentors, accountability partners, or trading communities where they review their performance. This keeps them honest about their behavior and helps them spot psychological blind spots they might miss on their own. Mental training isn't glamorous. It's repetitive, sometimes boring, and often uncomfortable. But over time, it transforms how you trade. You stop reacting emotionally to every market move and start responding strategically. You notice when fear, greed, or impatience begins to creep in, and you have the tools to address it before it sabotages your trades. Think of it like this. A strategy is a car, but psychology is the driver. You can have the fastest, most expensive car in the world, but if the driver is distracted, emotional, or untrained, it's only a matter of time before there's a crash. Mental training is about making sure the driver is always sharp, calm, and in control. If you want to start training your mind today, create a simple daily routine. Spend 5 minutes visualizing scenarios and your planned responses. Practice mindfulness by doing a brief breathing exercise before every trade. Review your emotions in your trading journal, noting what triggered them and how you handled them. Over time, increase the intensity. Trade in slightly more stressful conditions. Increase your position size within risk limits, or practice holding winners longer despite the urge to take profits early. The market will always test you. News will break unexpectedly. Price will spike against you, and opportunities will vanish in seconds. You can't control these external events, but you can control your internal readiness. And that readiness comes from consistent mental training. Just as an athlete walks onto the field knowing they've trained for this exact moment, a mentally trained trader sits down at the desk with a quiet confidence that they can handle whatever the market throws at them. It's not arrogance, it's preparation. In the end, your mental game is the foundation of your trading game. Without it, even the best strategy will collapse under pressure. With it, you can navigate uncertainty, manage stress, and execute with precision day after day, year after year. That's why the best traders don't just train for the market they see. They train for the mind they bring to it. In the end, improving your trading psychology is not about memorizing market patterns or forcing yourself to stay calm. It's about transforming how you think, feel, and act when faced with uncertainty. You've learned that the real battle is not with the charts, the brokers, or the news. It's with your own impulses, fears, and ego. The trader who succeeds is the one who has cultivated the discipline to follow a plan, the patience to wait for the right moment, and the self-awareness to step back when emotions cloud judgment. Markets will always be unpredictable, but your mind doesn't have to be. When you shift your focus from chasing profits to mastering yourself, trading stops being a gamble and becomes a skill. The secret no one shares is that consistent profitability is the natural byproduct of mental clarity, emotional balance, and unshakable discipline. In other words, master your mind, and the market will follow.